exam prep. I want you to be prepped at some level so that when we come back to me, then we can at least do the stuff quickly. Is there anything else after we've done the statement of cost of goods that you'd like to go back in this book, the study guide, that you'd like me just to repeat? So I'll just maybe have a session afterwards, after the statement of cost of goods. And then you can just ask me to explain something in the book before we go on to question papers and exam prep and stuff. Okay. Let's go to page 240. I want you to also stop me if you think I'm going too fast. Okay, because I know that some people are saying that I'm too fast. I do talk very fast. But if you lost, I know your Kisa always stops me, and that's great. But just stop me if you lost. Okay, let's look at page 240, right? Example 8.4. And the screen freezes all the time, so you need to tell me my screen is frozen. Okay. So you get two. Don't confuse the two. You get a statement of cost of goods manufactured, and you get one that is cost of goods sold. Now make sure that you know what they're talking about in the exam. Okay? So let's look at page example 8.4, and then let's do the statement of cost of goods. Okay, African Dream uses a normal costing system. Do you remember what normal costing system is? Okay, maybe you'll ask me to repeat that section again later. All production overheads are absorbed in the cost of production by means of a plant-wide rate of 200 Rand per machine hour for assigning overheads to the single production department. The company uses a periodic inventory system and the FIFO method. Costs are accumulated in the production department by means of a process costing system. At the beginning of June, the balances of the inventory account of African Dream were as follows. Inventory of direct material, inventory of indirect material, blah, 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 inventory of work, whoop, blah, 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 inventory of finished goods. Okay, during the month, direct materials costing 485,000 were purchased, and at the end of June, the value of the direct material physically on hand was 55,000. That is all information that you're going to use. Purchases of indirect material amounted to 18, and the value of closing inventory of or indirect materials was 13K. There were 80,000 units finished at the end of June. Other costs incurred, labor, factory overheads debited to production clearance account. During the month, 100K units were completed and transferred to the finished goods. At the end of June, the cost of WIP was 30,000. A total of 450 machine hours were worked during the month. Okay. Just to comment on your post this afternoon on WhatsApp. Remember, you all are going to get juggled questions and you're all going to get different questions. You're not getting the same exam. Okay? But remember, if we work through a question paper, you can work out from there. Maybe if you take it paragraph by paragraph, they might ask you from there the questions. I really don't know. Okay. So let's complete the cost of goods manufactured. Okay, let's begin. And just stop me if I'm going too fast. So let's begin with our direct materials. You need to tell me what I'm going to put in there and why. Okay. Anybody want to go? Anybody want to go?
Aziza, I'll try.
Okay, you can go. Direct materials.
I think the amount for direct materials will be the opening inventory for direct materials plus the purchases of 485 and then
In opening, how much was the opening inventory?
65,500.
Okay.
And then we have to subtract the closing inventory, which was 55,000.
Okay. So what about
And add the
purchases?
purchases, yes.
So you're gonna add the purchases.
Oh.
And that was 485,000. Okay. So what is that total? So that would then be 495,000. Okay. Then your direct labor. Okay. What would the direct labor be? Anybody want to go? Anybody? Direct labor?
Aziza, here they say labor cost, of which 85% is direct labor.
Okay.
So it's that 170,000 times the 85%, which
Okay.
is 144,500.
Okay, exactly. So you need to listen to what they're telling you, what information they're giving you. They won't always give it like that. They could give it any other way. Um, let's do your production overheads. Is this actual or normal? Actual or budgeted, projected? What is this here on top? And what is this here? These are actual. Remember, on a normal costing, the direct materials and the direct labor will be actual. Okay, your production overheads will be affected. So let's do our production overheads. They said to us that production overheads are absorbed into the cost of production by means of a plant-wide rate of 200 Rand per machine hour. Okay, so what do we do with that?
Aziza, they say a total of 450 machine hours were worked during the month. And then they said here a rate of 200 Rand per machine hour.
Okay,
So we just
so,
multiply it and then get the 90,000.
okay. So let's just calculate that. Okay. So now we have to take into account our opening inventory for work in process. Okay, so our opening WIP. Okay, what was our opening WIP?
The opening work in process progress was 100,000. But then on top, at the beginning of the year, the balances of injury accounts of African Dreams were as follows. So,
Okay, and what is our closing closing WIP?
oh yeah. During the month, 100,000 units were complete and transferred to finished goods. At the end of June, the closing work in process was 30,000.
Okay, so 30,000. So our cost of goods manufactured was 800,000. Okay, everybody with me?
Yes.
Okay, please just stop me if I'm going too far. Okay, so let's do the next one. Our statement of cost of goods sold for June. So you will have an opening inventory, right? And what was our opening inventory? Remember, this is finished goods, no? Okay, so our opening inventory would be anybody want to go?
Our opening investment is 135, as it's written there. It says that the balance on the inventory account of African Dream were sold inventory for finished goods, which are 27,000 units, and cost of it is 135,000.
Okay, thanks. Okay, what was the cost of goods manufactured?
Isn't it 800,000? We just calculated now.
Yes. Okay, so what is our closing inventory?
Aziza, I can't hear anything. I think somebody is.
Okay, let me just mute everybody quickly.
Okay.
Um, okay, I've muted everybody, so if you need to talk, just turn on your mic and then switch it off when you're done again. Okay. Okay, so my closing inventory. What would my closing inventory be? Anybody want to go? Can I just ask the people who came in, put your student numbers in as well? We are on page 240, example 8.4. Anybody want to go with the closing inventory? Closing inventory, anybody? Okay, let's do the closing inventory together. So we know that we calculated 800,000 based on 100,000 units. Okay, which left us with 8 rand a unit. Okay, so if we do the closing inventory, right, they said to us there that there was 80,000 units in finished goods at the end of June. So it will be 80,000 times 8 rand. So that will give me 640,000. Okay. So I'm going to have to minus 640,000. Right? So at the end, my cost of goods sold will be 295,000. Everybody with me? That's basically how you do a cost of goods statement.
Sorry, Aziza, I can't see anything on the screen.
Oh, okay. Is it frozen again? You just need to
Yes.
remind me every time that you can't see.
Okay.
And I have to reshare it again. Okay, is that better now?
Yes, yes. Thank you.
Okay. Any questions on that? Can we move on? Nothing. Okay, let's go to page 245, question 3. And the first question that they ask us is to calculate the direct material for inventory. Okay. So let's read the scenario and then we start with this. Okay. Ubuntu Limited produces a single type of wall clock. There were no inventories at the beginning of April, and the following information pertains to the month of April. The number of wall clocks put into production at the beginning of April was 10,000. The number of wall clocks completed during the month was 8,000. The number of wall clocks sold during the month was 7,000. Direct materials required for producing one clock is 2 casings at 15 and 1 insert at 25. During the month, the following purchases of direct material were made: 23,000 casings and 11,000 inserts. The total direct labor cost for April was 30K. The total direct labor cost assigned to clocks completed during the month was 24,000. Okay, I'll be with you now for the person that can't see anything. I'm reading out of the textbook out of the book on page 245. The total manufacturing overheads was 22,000, and the total manufacturing overheads assigned to clocks completed during the month was 17,600. So firstly, I need you to calculate the direct material inventory. Can you not see my screen? Is it frozen again?
No, ma'am, it's not frozen.
Oh, okay. All right, let's start. How are we going to start with this question? They want to add the value at the end of April of the direct material on hand. So how do we tackle this? Actually, very simple. What is my framework? Anybody want to give me what is the formula or the framework?
The opening inventory plus purchases minus closing inventory.
Good day.
Yes. That's correct. So let's start now with that. Thanks, Robin. Okay, so let's start with that now. So what would my opening inventory be?
There was no inventory at the beginning of April.
Okay, so let's put a null there. What would my purchases be? Why are you people so slow?
Purchases will be that 2 cases.
2 cases.
Now the case, let's say that each case is 15 rand, am I correct? And one instead is at 25 rand.
Yes. Yes. So 15 at cases at?
And at 15
15 rand
at 23,000 cases.
Okay, and
So it's 23,000 cases
25 rand.
at 11,000.
Yes, and 20. Okay, and 25 rand at 11,000.
No,
Okay.
no,
See,
it's 23,000 at 15 rand.
is how much?
That's 345,000.
Yes.
And then
And
it's 11,000 at 25 rand each. That's 275,000.
that's correct. So altogether, it's going to be 620,000.
Yeah.
Okay. Any other thing? We missed something here. We forgot we forgot something here. We forgot the issue to production. Sometimes it could either be sales or something, or issue to production. So let's look at our issue to production. How much was issued?
It was 10,000, eh? 10,000 units. It's 10,000 units that they say the number of wall cloths put into production at the beginning of April was 10,000.
Okay. Yes.
During the material required for production for okay. So it was 10,000 units at the beginning.
Mm-hmm.
Okay, so they're telling us that the direct material required for producing one clock. So 2 cases,
Mm-hmm.
if I'm correct, and then you say it's going to be 10,000
Yes.
times 2,
Mm.
which will be 10,000 times 2 is 20,000, and then
Mm-hmm.
it's times 15 rand for ones,
Yes.
which give us 300,000.
Okay.
But
That's correct.
I don't see your screen, Aziza.
Again frozen.
Yes, Aziza.
Okay, let's just try to reshare again. Okay, can you see now?
Okay. Yeah, I can see now, yes. And then the same scenario is that goes for the other one. 10 gonna be 10,000 units.
Mm-hmm.
10,000 units times 1 times 25, which is
Mm-hmm.
250,000.
250,000.
Yeah, that's what my calculator says, is 250,000.
Okay. Okay, so that will be 550,000. Okay. So your closing inventory?
Okay, let's read further. They don't tell us what. Oh, they tell us. They tell us there, no? On top, the number of wall cloth
Mm-hmm.
during the month was 8,000 units, and the number sold 7,000.
Aziza, is it 3,000 units closing inventory?
Yes, 3,000 units at?
And I'm going to give you a price now.
Now, how did you get that 3,000 rand? That's the thing now.
165,000.
Yeah, how much?
165,000.
Why 165,000? So if you had
I
3,000 units times 15 rand, which would then be 45,000.
But
times 15 rand.
yes, because each case
Yes,
costs 15 rand.
cost 15 rand.
Is each clock not 55 rand?
No, we've been calculating your 15 rand. Not the clock, the casing.
Casing.
But didn't they say they said it takes 2 casings and 1 insert to make a clock. Because like you got the 55,
Yeah.
550, that is what I got there as well. But instead of breaking it up and saying 2 times 15 times the 10,000, I did the total cost of one clock, which is 55,000 times the amount of units. So that's why I took the
No,
3,000 units
but we
times
need to
the
calculate
55.
how much casings we have left. And you said there's
Okay.
3,000 casings. So you're not going to multiply it by 2 again because we're not using 2 casings for, we're not doing anything. We just want to know how much closing inventory we got. But here, when we issue to production, you then going to use two because it takes 2 casings per clock. You understand what I mean, Robin?
No, I'm lost.
Okay, there's 3,000 units casings on hand, right? But now it's 15 rand a casing. So we've got 45,000 rands worth of casings left on hand. That's as simple as it is.
But if I look at the units that they're referring to, right? When they speak about number of wall clocks put into production,
Mm,
when they speak about number of wall clocks completed during the month, and then again, number of wall clocks sold during the month.
mm.
So that's why I used the 55 rand as a. I used both the casings and the insert for.
No. When you
So I
calculating
mustn't.
no, Robin, when you're calculating your closing inventory, you're going to use the value of your inventory, not what you sold, not what your selling price is. We only want to know what is the value of that inventory on hand. Say you selling dresses, right? And you pay 12 rand for your dresses. You got 100 dresses there, you're selling it for 12 rand each. Now you sell 90. You've just got 10 left at 12 rand. That's your cost of it.
Yes.
Now, this is the same thing that they're doing here.
Okay.
Same story.
Aziza,
Yes.
where did you get the 3,000?
Robert,
Yeah,
just explain to them where did you get the 3,000? Put 10 in production. And we sold 7.
Yes, that's the.
So you get 3,000 left.
Yes.
Okay. And then the inserts, the number of wall clocks completed was 8,000. And the number of wall clocks sold during the month was 7,000. So you have 1,000 left. Right?
Oh.
So 1,000
Thousand
times 25 equals your 25,000.
5,000.
But either way, you could have just minus that there. Then you're gonna get your 70,000 left. So 45 plus 25 is 70,000. There was 2 ways to do this. Okay. So in a multiple choice, you're gonna go for this route here, 620 minus 550. Because that will then give you a quicker answer. You're not going to get marks for all these calculations for you. Okay. Is everybody with us on the same page? Literally and figuratively?
Yes, I think I am.
Okay, let's move to our work in progress. Okay, so let's start. Let me just give you 2 minutes and you can calculate to start with to look at the work in progress, the WIP account. Okay, so what is our framework for the WIP account? What is our framework? I would say input. I would say completed.
Can't see Aziza.
Okay, I'll be with you now. Okay, let me just reshare again. Okay. Let's go. So our WIP framework will be input, completed, and on hand. Right. Let's start with input first. How are we going to calculate the input?
The input, it consists of direct material cost.
Which was?
Like we worked out, in the previous thing, it's at 550,000.
Okay, let's call it the issue to production cost.
Okay.
Okay, so that was the 550,000.
Okay. Yeah.
Okay, yes.
And then at the example, it shows the total direct labor cost for April was 30,000.
Okay.
And then they also show you here total manufacturing overheads was the 22,000.
Okay, so that is your production overheads.
Mm-hmm.
Okay. Right. So 550 plus 50,000, 602,000. Okay, let's move to completed goods and transferred. On what figure are we basing the completed goods here?
The goods completed, which was 8,000.
That's it. That's it.
8,000 units.
Yes.
Okay.
Okay. So now let's go.
So we began the month with 10,000. Then we sold and then we completed 8.
Mm. Okay, so let's look at the direct materials first. So what is going on about my direct material cost?
That was issued to production, am I correct?
Yes.
Which was 550,000.
Mm-hmm.
Okay, now I see how Robin got the 55 rand. Okay, so our issue to production was 550,000.
Mm-hmm.
At the beginning of the year, we had the same year number of wall cloths into production at the beginning of April was 10,000 units.
Mm-hmm.
Something, and then Do you times or do you plus? That's unit. You divide.
You divide 4,000.
It must be something, but I'm not sure if it's the 8,000 that you divide or is the 10,000. Completed.
But you just told me now that it's 55 rand. So why do
Yes,
you want to divide further? Because you said, oh, that's how Robin got it. So it's the
yes, because
55 rand.
I divided by 10.
Yes. So you got
That
your 55 rand.
I got the 55, yes, but I'm not sure now
So
if you.
you're going to multiply it by your 8,000 units. Because that is what you will have on your direct material.
Okay, 8,000.
So what is 55 times 8,000?
It's 440,000.
How much?
440,000.
Thank you. Okay, so everybody knows how we got that figure. Okay, let's move to direct labor cost. So what do we put in for our direct labor cost?
Aziza, the direct labor cost is also given. It's
Okay,
at 24,000.
okay, and the production overheads?
It's also given, and that is the 17,600.
Hey, you people are lucky.
I was thinking also like making it a bit. Oh, I don't know. I don't want to speak too soon.
Okay, so if you tally that up, you will get an amount of 481,600. Okay, now let's do our closing inventory or on hand. So once again, how much direct materials do I have on hand? How much direct labor? And how much production overheads? Okay, so let's go with direct material.
So it's basically again the same formula of that 550,000 divided by 10,000 units, but now we only have 2,000 units left.
Yes,
So
so
we
it's a
times it by
50.
the 2,000. Yeah,
Yeah, okay, and you get how much?
110,000.
Okay, direct labor.
That's the 30,000 minus the 24,000.
Okay, 6,000, and your production overheads.
The same thing, where it's a 22,000 minus the 17,600.
Okay, so that is 120,000.
Oh, Aziza, I wanted to ask you, hey, to get that 110,000 by direct materials, you could have said that 550 minus the 450, eh? Instead of doing that whole formula.
Yeah, yeah, yes,
Okay,
yes.
cool. Thank you.
Just yeah, just give me a sec quickly. Okay, this is wrong here. So you could have said also 602 minus 481 is 120,400. Okay. So the third one is the finished goods. Let's take a minute and look at that quickly. Okay, who wants to go first? What is the opening inventory?
Don't have opening inventory.
Thank you. Okay, so the cost of goods completed was 481,600.
Yeah.
Okay, given.
Complete.
Okay, so now what is the finished good available for sale? Anybody want to go?
So if we have completed page 49.
Okay, how much, how many, the page number, we are on page, what page are we actually on? We are on page 245. Page 245, question 3, 3.3. So we got 481,000, which was completed, 600, right? 8,000 units was completed, right?
Yes.
Okay. And 7,000 was sold.
Yes.
Okay. So that gives you an amount of 421,600. So if you deduct that, you will get an amount of 60,200 of finished goods. Okay. Let's look at the next one, question 4. Right. But let's only do 4.4, where we're preparing a cost of goods manufactured. Okay, so let's just take a minute, 4.4, and we're only going to do a cost of goods manufactured. Alrighty. Take a minute. And start with direct material. Just do our calculations on this side.
Are we doing 4.4?
Yes, please. Okay, so I'm going to give you 2 minutes. I want you to calculate the direct material. I want everybody to calculate it so that when you get it wrong, you know why you got it wrong. Yes. Okay, so I'll give you 2 minutes because we need to work on our speed. We're very slow. Okay, let's begin. Anybody want to go? Anybody, what is the opening inventory?
Hi, Aziza. The opening inventory is 70,750. And if you look on page 246, it says component KKK, which 15,000 units, and component MMM, so it's at 57,000 plus the 13,750, I think.
Can you see my screen?
Yeah, I can see it.
Okay, so the 57,000 and the 13,375, 750, sorry, will give you your opening inventory of the 7750. That's spot on. So let's calculate our purchases quickly. Anybody want to do the purchases? Yes.
Sorry, man. I saw it's on the next page. I thought that was the end of the question. But direct materials purchases 80 for KKK and 420 for MMM, triple M and triple K, and that gives you the 900,000.
Okay, everybody see that? $900,000 on the next
It
page,
was on the
direct
next
material
page.
purchase.
Yeah.
Yeah, 480 and 420,000. Okay, so what is my closing inventory? Anybody want to go for my closing inventory?
Aziza, it's there in the third sentence where they said the last delivery of direct materials was made on the 7th December. So it's that 25,000 times 4 rand. And then also the 35,000 times
So,
3 rand. Oh,
hold on quickly, something is frozen here. Times the 4 rand. And then the 35,000 times the 3
3
rand.
rand.
Why am I making minus? Okay. So that would give you your 205,000. Okay, so let's calculate our labor. Our direct labor.
Aziza, is that gross wages on page 247, the 290 plus the 250.
We just see that 290, 250.
It's here on page 247 under gross wage.
247 under gross wage. Yes. Yes. P1, P2, Department S. Okay, yes. So 290 plus 250 is
The 540.
Is at 540,000.
Yep.
Okay, your production overheads.
Can't see on your screen, Aziza.
Yeah.
Okay. Just give me a minute.
I think I'm gonna need a bit of help with that one.
Okay, anybody want to help Bilkis with our production overheads? Can you see my screen now?
No, this is a can see, but I think they
Can you not see the screen?
can see.
Hello?
We can see us is a
Oh, you can see. Bilkis, you said 200, that was 290,000 and 250,000, okay?
Yes.
The production overhead department, let's look at that. Wants to look at the company costs its products on a normal costing basis to the full absorption costing method. Production overheads are absorbed, a portion to production at the plant-wide rate of 320 per direct labor hour. All inventories are held according to the perpetual system and the FIFO method is used. So we know that they have a rate of 320 per direct labor hours. So what now? Now what is the labor hours?
So they say, oh, okay, so you're gonna do it.
no. Look, I think I'm also on the same page there where they say during December.
Yes.
Uh,
The direct labor is 107. Oh, sorry, 1,760 and 1,440.
yes, for direct labor hours.
Yeah. So you add that, and then they said here 320 rand per direct labor hour production overheads was apportioned.
That's correct.
So that you
So that
multiply
how
those
much?
two. Gives you 1,024,000.
Okay. Is everybody with us on the same page? Just give me one sec quickly.
I'm lost on production overhead, Aziza.
Okay. There was the labor hours of 1760. Where did you see that, Pilkies? Let me just see.
First paragraph.
It's in the first paragraph.
Oh, okay. I can see
Oh,
it.
yes. During December 1760 and 144 direct labor hours were worked in Department P1 and P2. Okay.
Yes.
So basically, you're going to add that, and they said there at the bottom that they use a rate, a plant-wide rate of 320 to get our production overheads. Okay.
All right. I can see it.
Okay.
Thanks.
So now we have our input cost for December. So let's calculate the opening WIP. What is our opening WIP?
Aziza, that's given as 277,900. It's just there under component
Okay.
MMM.
You're lucky tonight, eh?
Very lucky.
Okay. And what is our closing inventory? Our closing WIP?
Is it 5,988.50?
No, it's not.
Oh, 231,650.
Where did you get that from?
It's given in that line below the opening balances. The value of closing inventory of work in progress and finished goods was
Okay.
231. Yeah.
So 251,650, and you're gonna minus that. Okay, so minus 231,650. So now your cost of goods sold is 2,376. Okay, 2,376,000. So that would be your cost of goods sold. Sorry, manufactured for December. So yeah, basically that's that. Is everybody clear on this chapter? Any questions?
As usual, sorry to bother. I just have two questions. Did we cover learning unit 14 already?
14. Do we ever have a learning unit 14?
Yeah, it's just basic concepts, but I think that's like maybe explanatory.
Okay, should we go through it quickly? We haven't done 14.
Okay, cool.
Seems that we still do have time left. Okay, basic concepts business. Book broke now. Basic concepts. Okay. This is more like business management. Let's just rather do the questions at the back. That's going to be better. Okay, let's rather do the self-assessment questions on page 365 because this is like very theory orientated. Okay, let's look at the first one. Okay, a SWOT analysis. Carefully consider the following, whether they're true or false. A SWOT analysis means an analysis of strength, weakness, opportunities, and talents of the company. True or false?
True.
No, that's
I don't
false.
think it's supposed to be talent at the
It's
end.
not talents, it's threats.
Threat is false.
You must let's look this is type of questions that you probably get. Okay, a mission statement defines the core purpose of the company.
True.
True.
True. Yeah. The stakeholders of a company do not have a legitimate interest in the affairs of the company.
False.
That is false.
Mm-hmm.
The stakeholders does have a interest in the affairs of the company. You know what I'm thinking now? Now, this book, every self-assessment, multiple choice you need to go through, because that is the stuff that they're gonna ask you.
Yes, that is
I
actually
would not,
very
I
good.
would not focus so much, spend so much time on old question papers because remember it's a new thing now. But I would use this multiple choice at the back. I think that 50 or 60% is gonna come from there. That's what it just strikes me now.
I've got the same feeling.
Yeah.
I think what
Yeah.
I'm going to do is I'm going to go through one or two question papers with you.
Okay.
I'm not going to focus on a lot. Then I'm going to look for stuff in here that we can go through as well. But I think that this is going to be this type of questions at the back is going to be the multiple choice. Okay, let's look at the next one. According to the King report, the board of directors should appreciate that stakeholders' perceptions affect a company's reputation. That is true. Okay. Compliance risk refers to the risk that the company may fail to comply with applicable laws.
True.
True.
True, yes. The first step in creating a strategic plan is to do a SWOT analysis.
True.
True.
True. Opportunities and threats emanate from the industry, macroeconomics, and political environments.
True.
Okay, some conditions can be opportunities as well as strengths.
I think that's false.
Okay, only internal factors can be strengths and weaknesses.
Was it false?
Mm.
It's false, yeah. A risk is accepted when management is prepared to accept the impact of the occurrence of the company.
Yes, it's accepting. Yes,
True.
True.
Okay. Strategies that are developed to set the company apart from its competitors will focus on price and product.
True.
True.
Okay. Let's look at the following. Long-term planning, the focus is on economic and business issues facing the company is referred to as.
Strategic planning.
it's B.
That's correct. The logical step in the planning process is what?
Establishing an action plan. A.
No. Assess the current conditions. An action plan will be afterwards. The first step, you first can assess the current conditions
Okay.
of the market before you go to a plan and set your goal and objective and allocate the financial resources. You need
This
some
is,
statement. Yes?
I was going to say now, a lot of these questions remind me of auditing. Kind
Yes,
of.
yes, you've probably done it
Yeah.
already.
Yeah.
Okay, UNISA statement, the African University shaping futures in the service of humanity is an example of a.
Vision statement.
Yeah,
Why not mission statement?
because a mission statement is your mission. That
Your
is
plan.
your vision. Yeah, this is your vision
Okay.
because it's shaping the future in the service of humanity. Let's just go in. Okay, that's okay. Let's just go and read up about what the mission statement is all about. Okay, let's go to business planning. What page is the mission statement? Mission statement on page 359. Okay, look at Tiger Brands mission statement. Vision to be the world's most admired branded consumer packaged goods company in emerging markets. So that's their vision. Their mission is to be high performing, fast moving consumable goods with leading brands operating across the globe. And then they have the values. So your mission statement is like, what do you want to achieve? Your vision is what is your vision. And now furthermore to explain it. Okay, let's look at the next one, 2.4. The what management set the strategic objectives of the company.
A.
Senior, yes. Which of the following objectives set by a company must be the most difficult to measure?
D.
What do you say, D?
D, yeah.
Yeah, social responsibility, because profitability is easy to measure because you've got a balance sheet and an income statement. Quality
Yes.
is easy to measure. Financial objectives is easy to measure, but your social responsibility objective that you can't really measure. Okay? A company realizes that paper is a fire risk and installs smoke detectors and water sprinklers in its paper store. This is an example of a.
A transfer risk.
Okay, let's go read up on the risks. It's a mitigated risk. Let's go read up on the risk quickly. Where is the risk?
362 types of risks, I think. Is it that page?
Yeah, but let's talk about the mitigated risk.
Management risk.
Oh, yes, it's on page 364, bullet
yeah.
2.
Okay, let's look at 1, 2, 3, 4. Okay, once management have decided and evaluated the risk, they must decide how to manage the risk. So risk management involves the following four. Risk can be avoided by reducing the probability of it occurring. So example, the risk that the external auditors may qualify the report on the financial statements because of a lack of financial reporting expertise in the finance department. The risk can be avoided by appointing a consultant to evaluate the financial statements before they are submitted. The risk can be mitigated by taking action to minimize the impact of the risk should it occur. So, for example, the impact of the risk of Eskom's load shedding can be minimized by installing a backup generator. So, mitigation is actually how you can minimize the risk of something. Avoidance is how you can completely avoid it by putting something in place. Okay, risk can be transferred by moving the impact of the risk to an external party when it occurs. For example, the financial impact of the risk that the factory can burn down can be transferred to an insurance company by taking out insurance policies. So number 4, the risk can be accepted when management is prepared to accept the impact of the occurrence of the risk. Okay, so you can read further. Now, listen what I think. Because each person writes a separate exam, when you prepare and you got this multiple choice where they gave you avoided, mitigated, go make sure that you know all 4 there. Because Bill Keys is probably going to get one that says avoided. Yukisa is probably going to get the one that says mitigated. Robin is probably going to get the one that says transferred, and Tristan is probably going to get the one that says accepted. So when you go through this, don't just go through the questions and the answers. Because each person is getting versus their own separate personalized exam. Okay, can we move on?
Yes.
So risk evaluation attempts to assess each risk according to probability and likelihood, probability and availability, probability of impact, and probability and mitigation. So what page is that? I've seen that. Look on page 363.
Oh, on the table.
I think so.
Yeah.
That's the closest that I can see. So anyway, with that, you need to make sure that you study once again all
All of them.
the probability and likelihood, probability and availability, probability and impact, probability and mitigation. So make sure that you know all of it. Okay. So 2.8, all of the following except are external stakeholders of the company.
Hey.
Shareholder.
Yeah, so make sure if they say internal stakeholders of the company, make sure that you know to swap it around also.
Definitely.
Could be. Okay, so that is basically chapter 14. And if you look at feedback 14.1, that's also something that they might test you on here on page 360. Let's look at that one.
Page?
Page 360.
360.
Are you people following me?
Yes.
Am I jumping around? Okay. So let's look at this also something that I could test you on. Identify the issues listed below, which is a strength, which is a weakness, an opportunity, or a threat.
Okay.
So, the company has low debt. What is that?
That's a strength.
Okay, the industry trade union is prone to strike action.
Oh, that's a massive threat.
Okay, the company has significant financial resources.
Strength.
There's a high level of waste of direct materials.
Weakness.
The manufacturing equipment of a company is very old.
Weakness.
There's an increased demand for the company's products. Opportunities. Many new competitors are entering the market.
Threat.
The company's workforce is highly skilled and committed.
That's a strength.
The company's suppliers are reliable.
Company suppliers are reliable. That can be a strength and an opportunity as well.
I would say that's a strength. I see that they say it's opportunity.
Yeah,
That
I
would be
also
a
see it as
strength. Okay, and if the company's suppliers are unreliable, that would then be a weakness.
Yes. So it's a strength. Yeah.
Staff turnover is high. Okay, company taxes which are high. Why is that a threat? Company taxes are high. Isn't that a weakness also? How's
So
that a threat?
the company is not paying their taxes or they're not declaring right. SARS might
Company
come up.
taxes are high. It could probably be that they made a lot of profit. They have to pay high taxes. Put them in a different market. So how is that a threat? I don't know.
maybe they can get in trouble if they're declaring or something.
Okay, the prime interest rate is low.
That's an opportunity to invest.
That is a catastrophe when the prime interest rate is low. Yukisa, this question goes to you. What is the difference between the mission and the vision statement? Let's read. The mission statement describes the purpose of the company, while the vision statement describes the desired future state of the company. I can only say it as the vision. So it's the desired future state of the company, and the mission statement describes the purpose of the company. So your mission statement is to pass accounting, and your vision statement is to become an accountant. That's the difference.
A tax man.
Sorry, or a tax man. Do you want to be a tax man?
Yes, I would like to become working SARS. That's my aim.
Ah.
Yeah.
Oh, then they will come to you. Then we know you.
Yes, but most people don't help you. Have you ever asked those people a question? Do you think I should do this? Or what is this? They just look at you. They've got this code of conduct where they just look at you. I'm like, now can you tell me? They just look at you. I don't think that they're allowed to say anything because they're not allowed to say anything to the client.
It's fine, Aziza. We're gonna know you, Kesa. We're gonna ask for him.
I be like the rest of those people. They're all the same. I think they sign an oath or something.
Oh, okay.
Remember, they can't help the taxpayer to pay less tax. We must get the taxpayer to pay more tax. So when we employ our tax consultant, their aim is to pay less tax. So So how does the company implement a strategic plan? Through the development of operational plans and the setting of performance plans. So basically, this is stuff that you must yeah, 14, that's basically it. Okay, 14.3 on page 364. Identify 5 common risks that companies face. Make sure you know this also for theory. So 5 common risks is a strategic risk, the financial risk, the compliance risk, operational, and reputational risk. Reputational risk is very big nowadays. So, yep, that's it. I think, let me just stop the recording. Okay, is there anything else that somebody you want to ask me about this chapter? Or let's just discuss let me just go stop recording. Or let's just discuss the way forward. I'm